What is up, everybody? We are back for our Tuesday stream. We do this every Tuesday at 7 p.m. If you guys could do me a favor, if you enjoy the stream and the educational content you get from this stream, do me a favor and hit the likes for me. It just brings a little wider of an audience. And at the same time, if you guys have any tickers you want me to take a look at while I'm covering a few of the ones from last week, drop them in the chat. When I'm done with these few, we'll cover as many as we can in the time we got. And again, if you're leaving a ticker, smash the like. We're going to start out with Bitcoin here. This has been an asset we cover every week. This week's a little more exciting than it's been. We've been discussing this Wyckoff accumulation, all the different phases, right? We went over this last week. I'm not gonna do it again, but we will update you. I think last week, yeah, it was about last week, we were entering phase C. Phase C is the correction from the trap, this higher high zone up here. And again, the idea behind having this higher high zone, if you follow the Wyckoff method, is basically supposed to be a fake out. Because as somebody who's trying to enter a long position, you see us make a higher high. First thing you're going to think is, okay, we're finally recovering. We're going to make a move to the upside, and the idea is to fake you out. It's what it boils down to, and it's the same thing with this lower area down here. Up here, we're going to try to fake out the bulls, and all the while, this is, like I said, this is an accumulation structure. The idea is, the market is accumulating big money. The composite operator is getting his position ready for the move up. As long as he can keep this asset in between this range, he's going to accumulate low. He's going to sell high. And that's what that phase C, that's where the phase C comes in. The idea of having this lower low, this massive wick we had down to about 28.9, that was a fake out for the bears, right? We've had these lows. We got another lower low on June 21st. This big wick down, and we put in this bullish pin bar, right? And this represents massive buy pressure down in this lower area, the area that we were not able to close below prior to that, right? We had the initial wick down May 19th, and this would be a fake out for the bears. But if you follow the stream we do every week, we were talking about this, right? It's the shakeout spring. You make that lower low and you spring back up. All this buy pressure down here gives you that elongated wick, gives you the small body up top, making this bullish pin bar formation. And since then, we were looking for a back test of the spring, and that's what we got. We sprung up, we caught some resistance here, and you got this double bottom support from June 20th. And now that acted as resistance. Initially, we came back down. You got a partial decline here. And then we sprung up higher, touching this next resistance zone. That was we put that in on the 20th, right? You got this break, hook, and go. And then after we caught resistance in that zone, again, this is something we expected. If you follow the Wyckoff method, it's all part of this schematic designed to shake out the bears, shake out, the bulls trying to take long positions, leverage traders and such, while the composite operator is accumulating this asset. And after we caught that resistance, we came back down, we back tested that initial spring. Right, we sprung up, we chopped around a little bit, we came back down, back tested that zone as support. And if you look closely, right, the idea behind this shakeout spring is to knock this asset a little bit lower than our support levels, because what that does is it'll knock out stop losses. It'll knock out leverage traders who are convinced that the asset is moving up. And if you look here, we got this cipher pattern here, and we painted this price action just below this secondary test support from phase B, right? So if you were trying to stop out underneath there, you figure, you know, we might put in a double bottom on top of that support and then go. Well, you got faked out, because what we did for a brief moment here on the 4-hour chart, we did fall beneath that. We put in a double bottom candle close at about $30,800, and then we made the move. So again, the whole idea behind this this structure is to shake everybody out. It's, you know, everybody trying to take short-term trades. You know, we've been trading in this range since the middle of May. And again, you know, it's an accumulation structure. And at the same time, it's shaking out short-term traders, people who have stop losses and leverage, yada, yada. But we got the back test a little bit lower than our support level. And since then, we've been moving up. And again, the target of this cipher pattern would have been the A and the C. And you can see we caught some resistance there once again, you know, that same area that we were looking at before. We got some consolidation, and then we sprung up above it one more time and caught resistance. Surprise, surprise, at a taking profit level. You know, it could be expected. If you're a short-term trader, that's a place where, you know, people might have been taking profits. People might have been expecting resistance. And surprise, surprise, we do have this bearish engulfing candle coming off of that. And the idea next would be that we would come down, and whether it's at this 35,700 level or perhaps on top of this previous consolidation, you know, we're looking for a back test. We broke resistance. Now we want to back test it as support, giving swing traders, you know, or short-term traders even, another chance to take a long position here with a price level to lean on, right? If you're taking a position here, after we find support, you put your stop loss underneath that. And then the idea is, in theory, we would continue on up to this top of the zone one more time like we did here before. You know, that's not a prediction. That's just how the schematic plays out, whether it happens or not, whether we do chop around in this zone and create, you know, some more structuring, some more consolidation. So long as we keep making higher lows, you know, you would expect a continuation pattern here. To further the argument, we do have on this daily chart here, on the daily chart here, we also have, this is a black swan. It's another harmonic structure. This is more common in Forex, but all the same. The idea is, you know, you got an XABCD, you've got your completion point, which lined up with historical support and resistance. Strike that, reverse it, resistance and support. And again, the idea is at that point, that's when you would start to shift to the upside. It is a momentum shifting structure. And that's what we did. I've also got, now this is just an idea. I was looking at the daily chart here on Bitcoin, 4-hour chart regardless. And we've got this bearish harmonic that if this ended up playing out, it would bring us up to at the least the 39,865 zone, which is the 886 Fibonacci retracement up here. And again, you know, that's going to bring us up to the top of the level. You keep on knocking at the top of this zone, eventually you would think you're going to break it. There is a lot of buy pressure going on, you know, since we did put in this bottom here. But at the moment on the 4-hour chart, it does look like we are starting to come down a little bit. These oscillators are a little overextended. You've got bearish divergence on the MACD. You still got room to move on the 4-hour on the RSI. If you look at the Stoch RSI, though, we are just about at the top of the range, which would be confluent with the idea that we have to come back and more than likely test this 35,000 zone, whether we test that, whether we do test lower down here at 34,000. It wouldn't really invalidate the structure at all. But I'm really keeping an eye on, back testing. It looks like, about 35 to 36,000. And that's right about where we're at right now. Just for the sake of taking a look on these lower time frames, we are following this demand line. We are moving up, putting in higher lows. So we're still putting in higher highs. But if you zoom in even a little bit further here on Bitcoin, you have classic Wyckoff distribution. And that's the opposite of what the bigger picture's implying for us, right? This is the stuff that we saw when Bitcoin was struggling to get above that $60,000 zone, right? And again, this is the same type of idea as Wyckoff accumulation, but reversed, right? This is the composite operator trying to convince you that the asset is still going up, when in fact what he's doing is trying to maximize the price that he's selling this asset for, right? You start out here, you do put in a slightly higher high, and then you fall back down. So anyone who is trying to, trade this breakout above these highs here is going to, if you're on leverage, you're going to get liquidated, and that asset came right back down. And then again, we come down, we move back up, and we put in a slightly higher high just to reverse a little bit. And same thing, you get this, it almost looks like a head and shoulder pattern, right? You got your left shoulder, head, right shoulder, same idea. It's a structure that's designed to fake you out. If you're trying to take a long off this, if you thought this asset was going to continue up, it's the same idea. But we did come down. We did, and again, if you're trying to identify something like this, the same way that you would identify a rounding bottom as accumulation, you got the rounding top. If we flip the chart, well, hell, that looks bullish to me, right? You got the rounding bottom accumulation, spring, back test, and then spring. But we do not live in an inverse world, and here we are. But we're back down to that demand line. This is a 5-minute chart. This is nothing I'm going to try to trade off of, but it just gives you a view of what. I'm trying to think of how I'm trying to put this. Just it gives you an idea of what's happening on the smaller time frames, short term for this asset. That explains the bigger moves, right? You got your distribution. We came back down to support, and realistically, this is kind of what we have on Bitcoin right now. This is that support that we're leaning on right now in the bigger time frames. And again, you'd like to see it continue up on this demand line, continue to make higher lows, and all is well as long as we do that. Granted, if we fall off here, this is the 5-minute chart. It's nothing that's going to really stress me out. Because we do have to back test them lower levels. That's just how things work. You break a resistance, you retest it as support, and you move on. Ethereum's kind of doing the same thing, the same type of accumulation. You got that fake out zone up here. These are your lower highs. Came back down. We tested our lower lows. You've got this momentum shifting structure. This harmonic structure after a retrace that sent that asset back into bullish territory. We did make a higher high at this point with Ethereum, but the same thing. We went right to this resistance zone here at 2247, hooked onto it, and now we're bearishly engulfing to the downside. Same thing on the 4-hour chart here on Ethereum. It looks like we're overextended on the Stoch RSI. The RSI the classic RSI is up into overbought territory. We haven't pushed the limits. It doesn't look like we have any bearish divergence at this point, but the same thing you'd expect. We broke this resistance here at 2050, probably going to come back down and test it as support. That's what we'd like to see anyway. On the lower time frames, we'll kind of do the same thing, try to get a better idea of what's happening. Yeah, you could see we broke this resistance here, but we never came back down to confirm. Unless you want to move that up a little bit, you could kind of say that was our back test right there at 2065-ish, 2067. So right now, between the two of the biggest assets in the crypto market, looking like they need to cool off a little bit, you'd expect to see the altcoins probably pull back a little bit, or perhaps some of the money that's coming out of Ethereum and coming out of Bitcoin is going to go into the altcoins. If you look at the altcoin market, it just absolutely, it went nuts today. So it does look like the sentiment is starting to return into the crypto market. Ultimately, I would love to see, Ethereum break this zone, come up here and retest 2548 to, looks like about 2650. We kind of hooked onto that with that nice wick. You got a couple double top candle closes on Ethereum there as well. So you think, looking at this price action correlation, last time we touched this resistance as support, we went straight up to 2650. From 2650, we went straight down to 2247. So that would be the next zone I'm watching on the upside. On the downside, again, I would expect a retest of 2065 before we try to push that higher high. But it's progress, right? You had so many people calling for, on Bitcoin at least, 24,000, 20,000. I've heard somebody yelling out, 13,000, 15,000. And at this point, it looks like we may be testing some new higher highs, at least inside this zone, soon here. And if you want to look at the asset that both of these are correlated to, we're looking at the DXY. We talked about this last week. This is the US dollar currency index. We talked about how we broke this 10+ year demand line. Every time we touched this demand line since about 2011, we would get a bounce. We would get a bounce. We would get a bounce, and then we failed. And this is after this peak up here is COVID. And since then, we came down. We tried to test it again as support. We failed. We fell down underneath it. But not only that, we popped back up and back tested it as resistance. And that's March 22nd, 2021. And not only do we have that resistance, this 10-year long support that's now resistance, but you also have this horizontal resistance here, right? At 92, about 92.33, we are underneath that. And not only are we underneath it, but it looks like we have back tested what was once support as resistance. It does look like you're trying to get a little bit of action here on the weekly chart. If we zoom out, we've got the horizontal resistance, we've got this diagonal resistance, and you've also got this diagonal resistance coming down from a different direction. So if the DXY can't get above this, you're going to start going down even further than we're at right now. And that makes sense with the general climate, with inflation talks, with Bitcoin trading is hard in the matter commitment. With any kind of trading, man. you know, any kind of trading, whether it's traditional markets, whether it's crypto. But again, I do agree with that, because not only is, you know, crypto trading in general difficult, because you've got more factors than just price go up, right? You can get your altcoin positions, you know, just displaying the most incredible bullish charts, and all it takes is for Bitcoin to sneeze, and you're gonna have negative price action immediately in the altcoin market. And that's why it's so important to start regaining strength with Bitcoin. We've looked at this dominance chart a few times here, the Bitcoin dominance chart, which, as you can see, we've been tumbling since about January. You know, that's, I guess you could attribute that to how drastic the price action was to the upside in the alts, right? If the alts are going up, the money's coming out of Bitcoin, generally speaking, or at least that used to be the context. Not so much anymore, but it's the same idea. So we've got the deep retrace. You've got this momentum shifting structure, this bullish shark harmonic appeared out of nowhere and sent that Bitcoin dominance sky high, right? That's where you started seeing Bitcoin start to move back to the upside, started to regain some strength. And regardless of what you're invested in the crypto market, you know, that's important, because you do need this strength. You do need Bitcoin to show strength for the rest of the market. And since we're talking crypto, we could hop over here to Coinbase. That's one we've been looking at. We've been following on stream. Up until recently, it hasn't been remarkable whatsoever. But like we talked about, this was actually last week. We pinpointed this XABCD structure after the deep retrace on top of support. We put in our initial low at about 208. You know, we got that spring upward we're looking for. You've got this XABCD structure, which is a momentum shifting structure. It bottomed out here, putting in a higher low and arguably a double bottom here at 216. And while it was doing that, you also had bullish divergence on the MACD. You got the price action going down. You've got a double bottom here on the MACD, slightly less negative momentum. But you also got the same thing on the RSI. And if you look down here at the Stoch RSI, right while we're hitting this PCZ, which is the pattern completion zone, you've got, you know, RSI. You've got a divergence on both of these oscillators, but you've also got this Stoch RSI bottomed out here. And since then, you know, we have hit our first target up here at 257, but I do not think that's going to be the end of it here. We have not put in any bearish divergence yet. We are overbought on the 4-hour chart though. So, you know, you'd think, you know, at this point, we're probably going to come down and retest this resistance. We'd like to see that asset. You got resistance here, come back down, retest this resistance here at 241 as support, and that'll give traders the edge to take a long position, because they've now got support to lean on. You know, that would be a great entry if you were attempting to take a long position there, because I do think, looking at historical price action correlation at 304, the only thing we did from 304 is we went straight down. So you think, historically speaking, and the context of these variables, you'd think the next thing we're going to do, since the only price action correlation we have from 304 is straight down, you'd think at this point we're going to start testing these higher levels once again and ultimately make our way to 304. And again, any asset that is linked with Bitcoin, whether it's Coinbase, whether it's Mara, Riot, Overstock's even one that I've seen a lot of correlation with. You know, the whole lot of them, even Tesla. all these assets are probably going to, depend on Bitcoin to continue up. To see these assets do well as well, you're going to want to see that. SOS is one we've been looking at. This is a Bitcoin mining company. And the same type of idea. We had this deep retrace. You've got this harmonic formed. You've got your initial reaction. You came back down, tested this lower support level here, or this lower resistance level here. We kind of sprung up a little bit again, back up to this 413 zone historically from January 6th. And we came back down, and once again, we put in a higher low. At the same time, on the RSI was making lower lows, and we're making higher lows. You've got hidden bullish divergence at this point, which would imply that there would be a bullish continuation of the upside, which at this point in time has been a little bit lackluster. It does look like we're kind of struggling a little bit to keep support here. And at the same time, you did have, between point D and our back test, you did have hidden bullish divergence on the MACD as well. But if we zoom in here on the 30-minute chart to kind of get an idea of what's going on, you got some bar coding here. You've got nice volume, but you do have some sellers up here, right? This is definitely a resistance zone that we've got to break at 347. If we go back to the 4-hour chart here, 347, I want to see what the correlation of that zone is. It looks like you got a couple candle closes, a couple wicks back here, July 19th. Historically, let me extend that so you can kind of get an idea of what I'm talking about. You see this at 350. You got a couple candle closes, a couple wicks. You've definitely respected it as support and resistance historically, and we're doing the same thing right now. It looks like we caught some resistance there once again. So that's one I'm keeping an eye on still. I do have a position in SOS. And I think if we do end up breaking this resistance here that we're having trouble with, I would think 413 is probably going to be the next target to the upside. After that, 470, but ultimately I do think we're going to come back up to test the top of the range if we do hold these lower levels here. And we're on the daily now, and you can see not only do you got the hidden bullish divergence on the 4-hour, but you do have bullish convergence here on the MACD. If you look down here at the Stoch RSI, we are right down at the bottom of the range. The RSI is not giving you a lot of help. You could say bullish convergence on the RSI as well, but we're still down here. RSI is still down around 40. I'd like to see that break this RSI moving average. The same idea. With a standard moving average, you'd see that you'd use with your price action here. You want to see, like we did back here, May 25th, you want to see that RSI break above that. That would imply that there is a bullish edge on this asset. And again, you'd also like to see the Stoch RSI start to point upwards, start to make a little bit of movement back into the range here. I do like, what was the other one? CLOV. CLOV is one we talked about last week. I really liked how CLOV looked last week on the 4-hour chart here. If you zoom out a little bit, right, you've got this range, accumulation range. You know, you've got, I don't have this charted out here, but it looks like you've got this bullish shark. Oh yeah, you got this, you know, after a deep retrace, you've got this momentum shifting structure that pushed that asset back to the upside. You know, you got this spring, this massive spring back here, June 7th. I mean, ever since we hit that pattern completion zone on top of old support, we just took off all the way up to $28 with CLOV. This is an asset that's, you know, frequent in Reddit and Wall Street bets. So this move was super exaggerated. You know, when you get groups like that picking up assets like this, some of these moves might go a little bit haywire. But if you look where it ended up, right? We peaked at $28. We came back down to back test the spring, just like we talked about. But look where that spring ended up back testing. We back tested historical resistance as support. We've got this little falling wedge pattern that we broke out of. I think we caught this on last week's stream. We were just breaking out of that wedge, and if you look closely here on CLOV, XELA, what is that, Adam? Is that a stock or is that a crypto? On CLOV here, if you look, same thing that we always talk about. You've got this resistance here at 1272. You sprung, you back tested that. You've got this massive bullish engulfing candle that pushed us right back up to this zone at 1440. But we did test it as resistance again, which isn't ideal. But it looks like we're still building momentum on the MACD on the 4-hour. Same thing with the RSI. You're still looking like it's trying to test some higher levels on the RSI. The Stoch is kind of mid-range. But all three of these oscillators still have a little bit more room, but you want to see, before I could really, you know, continue to be bullish on this asset, I would want to see that 1440 zone broken. You know, you have tested it a few times here. You could have some heavy sellers in that zone. But that's what you want to see. And I think if we do break that 1440 zone, we're probably going to come straight up to 1640. It's got that double top at 1668. You know, that could be a zone where we might want to take profits, because we might catch resistance once again on that zone. And it looks like historically we've respected that as resistance a few times. Back in December of last year. So that's all I got really for CLOV. Yeah, I'll take a look at that for you, Adam. I could take a look at OEG too. I'll take a look at that after Tesla here. This is one. Tesla is one we talked about for a few weeks in a row. We had this massive harmonic off this deep retrace. You know, you kind of the same thing we were looking at with Bitcoin. You got this distribution pattern, a high, slightly higher low. You know, it's kind of like the same thing. You get these three peaks with a rounding top, and then we got this sell-off. But after the deep retrace on Tesla, we got this momentum shifting harmonic structure here with an ascending triangle coming off the pattern completion zone. But what do we always look for? You know, we don't want to just find these harmonics. We don't want to just find an XABCD like this. We want to see a reaction, which is our spring. You get your spring, you get your back test, and this is where we long Tesla at 573 with our first target. The 100% measured move of the ascending triangle brought us right to surprise where we caught resistance. this is where traders are taking profit. But you know, we've kind of held this zone since I think we initially hit it. What is that? Friday the 24th. You know, we're holding that zone on top of the 618 at 667. We are still holding it. So you could look at this like a spring. You came back down, you back tested this old resistance as support, and now we're trying to push for some higher highs. But you clearly have some sellers up there at about 695 that we got to get rid of. And I think our next major target that I was looking at, you could probably look at this little break hook and go at 710. Between 710 and 740 is where I would really, that's where I'd be keeping an eye on if we do break up. If we do come down, I'd probably look at 630 as an entry, right? Because you got resistance, 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 resistance. And we never got a back test. You know, we broke it, but we never came back down to back test it. And ultimately, that's where I would take a new long position if I was trying to get into some Tesla here. XELA. And if you guys could do me a favor and hit them likes. All right, we got some action here on, I'm not familiar with this stock, but I can look at these charts. The volume is outrageous. You got about 10 times the normal volume on this asset. So realistically, just looking at this price action, I mean, at a very small amount of time, you have just about tripled the price. But we can look at some historical levels here and, you know, try to get an idea of what's going on. You know, it looks like that's going to be your resistance zone here. You put in this bottom here, and then you've got support, you've got resistance. If we were trying to make some higher highs on XELA, that's where you got to get through. Because right now you're kind of in the middle of this zone. You've got resistance here. That's where you're kind of chilling out at. And then your support is all the way down here. So you're right at resistance. If you were trying to take a long on this, what I would want to see before taking a long on this asset is I would want to see you break this resistance and then back test it as support at 236. Or maybe even this 214 level, right? After you don't want to take an asset that's up this, you don't want to take a long position on an asset that's up so much because it's got a long way to go down if it doesn't hold these levels. Could it continue to go up? It could, and it might. But as a trader, if you're trying to be strategic, if you're trying to play the odds, you know, you would think this is where traders are taking profit. Probably going to have some downside and test some of these lower levels. And if you find support at these lower levels that were resistance before, that would be a good place to take a new entry on it, right? You got somewhere to lean on. You know where you want to get out, because if you come down and test and find support and then break it, I mean, everything, you know, your whole reason for taking the long position is going to be invalidated. And same thing if you look, you know, if you want to look at these oscillators here on XELA, you know, your positive momentum is still building, surprisingly. But looking at this RSI is grossly overbought. You know, this implies down. Same thing with the Stoch RSI. It's been pretty extended for about a week now. It's still moving right now, it looks like. So, I mean, just looking at the RSI, it does imply that, you know, it's more likely that this asset's going to come back down a little bit, let these oscillators reset, you know, find some support. And if it does continue to move up, at least you know that you have an easy out. And for targets on this asset, real quick. Yeah, like I said, up here probably, between 420, 330. I would think 418, 420 is probably going to be the target. And if you do end up breaking above that, you're probably going to come back up and test 795. Just looking at historical data on this asset, that would be the move to the upside if it made one. OEG stock. This is one I've looked at before and I do not remember it. All right, so same idea. You got your deep retrace. What was suspected to be the momentum shifting structure that flipped this to the upside. You did catch that initial spring. And then what do we always look for after the spring? You want to see it come back down and retest, the resistance as support, and it just couldn't do it. It did fall below there down to 289. But since then, this is the end of May, you broke that 289 or that 355 resistance. You've sprung. It looks like you back tested what was once resistance as support. Yeah, you are right sitting on top of about 447, which right now that's good. Because if you look back here, I think you could probably come down even as far as 439 and still be okay. Yeah, I mean, it looks like the magic number for me, at least. I would want to see that asset stay above 439, because if it doesn't, what happened last time? You look at 439 back here in April, and you look back down here at 354. Historical price action, straight up, straight down. Once you break this resistance, you go straight up, straight up, straight down. So if we break that support at 439, I would expect this asset to probably come straight back down to 355. So if I was going to stop out, I might look at this wick here from June 21st at about 428. If it fell underneath that, I'll probably get out. But on the upside, you do have, you'd think if this asset did come back down, test it as support once again and break up, I would probably keep my eye on, if we move to the daily chart here, I probably look at $5. I didn't have that marked out before, but I like that. You got this candle close, you got this massive wick down. I would look to $5, maybe this 474 zone, and then up to $6. But right now it's not looking good, because on this daily chart, you got this price action coming down, and then it came back up, and it looks like it tested that $5 zone as resistance. And now you've got this massive bullish or bearish engulfing candle coming down. But again, as long as you stay above this zone here, and test it as support, you might try again. You might start moving back up. PTE, contact, I got you. A little bit higher volume than normal on this asset today. Looks like it's doing about double. What is this? Consumer durables. All right, so you are on the low. Historically, it looks like this might be the lowest the asset's ever been, which isn't necessarily a bad thing, but you do want to see confirmation that it's moving back up. And if I was looking at it on the daily chart, we've got that 210 zone Looks like that's the top of the range here. Put another marker at 179. So historically, it looks like this is going to be the top of the range. You know, we've been on the underside of this range since before COVID. You've got a couple zones here. And let me see. All right, so if we come back here to December, right, you fell underneath the 78-cent zone. You got that massive spring straight up to 179. You came back down. You weren't able to retest that zone as support, but you did take another shot up at this 179 zone. You came back down, and it still, oh, I was a little bit off with my. All right, so it does look like you got a back test to that zone, and if we were trying to break this down a little bit further, you got your deep retrace. You've got nice XABCD pattern. And then what I'm seeing is you've got, you know, a spring, a back test, spring, and you kind of put in this almost double bottom here. But if you look, what we keep doing, if I can get my little drawings correct here, you got 1, 2, every time we do come back down so far, we've been making higher lows, which would imply accumulation. More market participants are buying and holding this asset. It is a range bound asset. So I mean, the way I would look at it is if we come back down, which we did, and retested that 85 zone as support. Last time we broke that, we went straight up. When we lost, when we caught resistance up here at the top of the range, what did we do? We came straight back down. So you'd think eventually we're going to go test the top of the range once again. And what I do like on this asset, if we zoom in, you've got lower low on the price. And while we're putting in that lower low on the price, you have less levels of negative momentum on the MACD. So that's your bullish divergence right there. That would imply that, you know, and if you look at the candles too, we've got support at $1 right now, and we're making less levels of negative momentum, which would imply impending price action to the upside. That would be, you know, the reversal of this sell-off here from 117. Same thing on the RSI. You've got a double bottom on the RSI while you were making them lower lows. And the Stoch. So the Stoch RSI is still down at the bottom of the range. I'm gonna zoom in a little bit closer here. I don't like the look of these candles. It does look like there is probably some HFTs going on, but it looks like so far on all of the time scales under 4 hours, you do have this Marabizu, which is a bullish candle, you know, because you have no wicks, it's just all body. Looking at the daily, the only thing I don't like about this so far on the daily is you are still building negative momentum. You know, that could flip tomorrow, and then you'd have bullish convergence. You've got, you know, your MACD's got less negative momentum, your price is going up. It just means they agree with each other, and it implies a bullish continuation to the upside. But you'd want to see that negative momentum on the 1-day chart start waning. You want to see that start fading and start moving up, and start see some positive momentum coming in. You can almost argue too, you've got, that's where I would be with it. You know, I think eventually if you keep on making higher lows, you're probably going to come back up to the top of the range at 179 to 210. That would be a profit taking zone for me. If you want to be a little bit more conservative, you could look at this candle close high here at 156. If you look up here, you got resistance, support, resistance. That's what I would do. That would be my target, at least short term. We got a whole bunch of these. I'm going to try to get through as many as I can, but I've only got about 9 more minutes. CAT, I can look at that real quick. Richard, I generally use the MACD, the RSI, and the Stoch RSI. And if you see, I've got a couple moving averages on here. One is the money flow on TradingView, and on Benzinga Pro it's MFL. And then I've got a custom momentum moving average, which basically the way, if you're trying to trade with those, you want to wait for the momentum to cross the money flow and you buy. And then when the momentum comes under the money flow, that would be a sell signal. Or when the price action comes underneath momentum, I'm sorry. For Caterpillar here, ooh, you got a nice correction here on Caterpillar. It looks like the same thing we were talking about earlier. Kind of got some distribution going on. And if we were looking for a bottom here, I'm not sure that we're there yet. Oh, you know what? You could probably look at this 202 to 205 as the bottom of the zone. It does look like we did come back here with this inverted hammer on the daily chart. It does appear that you're about to go positive on the MACD. You're about to see some positive momentum. Looking at the RSI, you did have divergence. Not only that, that RSI hopped on top of that RSI moving average we talked about earlier. And real quick, I know I'm running out of time here, but the same thing that we always talk about is you want to see your spring and your back test. And it looks like we fell underneath, but we are trading, in fact, above where I would want to see that back test of support. So as long as we hold up at 215, I like Caterpillar. You know, you could probably even come down as low as 213 here. And I would still think as long as we keep making higher lows, you're probably going to see some much higher prices on Caterpillar. You've got that nice deep retrace from all the way up at 246. If I was looking for price targets, I'd be looking for 222 on the way up and 234. But if we don't hold up at 215, I would think we're probably going to come down and, you know, potentially put in a double bottom there at 205 or 202. And if we're looking at the oscillators here on the 4-hour chart, which is what I like to use after the daily chart, you're still building negative momentum. But if you start losing this negative momentum here, you could definitely have bullish convergence on the MACD, and on the RSI, same thing. I like the Stoch RSI on the 4-hour chart. You kind of got this M structure thing going on here, and you're at the bottom of the range. And with the Stoch RSI, that's basically what I use that for. It's like a confirmation, at least for me, of the RSI. So if the RSI looked really nice and the Stoch RSI was at the bottom of the range, that would be bullish for me. I do like this volume signature here on the 4-hour chart for CAT. It looks like the highest volume we have seen since back around the COVID crash. So that could be, that could be a bullish indicator for you, right? In the last few days, you've been getting these nice volume spikes, positive volume coming in. So that's something to keep an eye on for CAT. I appreciate that, F5. I don't know if I got enough time for FCEL, but I'm going to try to rush through it here quick. And if any of you guys want to send me some tickers, I'm going to be at my computer for a little bit tonight. Shoot me a text over on Twitter at Trade Nomadic. You could follow me too while you're at it, if you think, if you want. Not a demand here. FCEL is one we covered before quick, but I'm going to start from scratch because it looks like it didn't go exactly how we planned. FCEL, I do like. You've got this candle wick over here at 910, or I'm sorry, 960. This kind of worries me right here, and this is the weekly chart. A lot could happen inside the daily and the 4-hour chart. The only part of this I don't like is it looks like you broke support and now you've hooked and back tested it as resistance. So until you get back above that, I would be a little bit cautious, because your next zone down on FCEL is going to be down here at about $3. As long as you stay above this zone up here between 642 and 1071, you're good. It's kind of a big range. I get that, but if you were taking a long position on this, what I would wait personally. I did see on the weekly chart, if you want a bullish scenario, you do have this hidden bullish divergence on the MACD, which would imply a bullish continuation. The Stoch is nice and low at the bottom of the range. The RSI doesn't look great, but it's kind of neutral. Not much you can gather from that. It does look like on the daily chart, it does look like you're losing your negative momentum. Same thing with the Stoch RSI. You're at the bottom of the range. Neutral again on the RSI for FCEL on the daily. But on the 4-hour chart here, and this is kind of confluent with what I was talking about, you've got, no, it's not bearish divergence, but you are losing positive momentum on the 4-hour chart. So obviously you're going to want to see either some positive momentum coming in to drive this asset a little bit higher, before I could really be bullish on it. But you might just come down and put in a double bottom here at 854 and then come back up. And up from there, same thing we were talking about earlier, 1071 would be my first place I'm looking. 1336 I like. It's real choppy up here. You got a lot of stuff to work through, but I would just step up the zones. 1071, 1336, 1848 would be the upside. If you fell underneath 854, you're probably coming right back down to the 642 zone that we were talking about. And again, if I missed anybody, I know there's a lot of them tonight. Shoot me a text or shoot me a message over on Twitter. I'll get to as many as I can for you. XELA. But yeah, if you guys could, I'm here every Tuesday, 7 p.m. And I do post all these charts on Twitter. So if you guys want to hit the likes, if you want to follow me on Twitter, I'd be happy to do check out some of these other assets for you too. But that's it for me this week. I am signing off, and I appreciate you guys coming out and looking at some charts with me. Thanks.